Hello, hello, hello. Thanks for tuning in, everybody. My name is John Ross, and today I have Matt Hammond with me. Matt, say hi.
Hello.
Matt, tell us a little bit about yourself.
I'm certified financial planner. I'm insurance licensed and exempt market licensed, and do portfolio management referrals to firms, boutique firms around the country. Run a firm called Sunesis Financial, building out a team of proactive advisors that really do a core of financial planning with people.
Matt, so what is it you do? I'm sorry, I blanked out there for the last 30 seconds. I have a better way of describing what you do. I have the luxury of knowing this man for a few years now. I think what Matt's trying to say in all of his words is that he helps you sleep well about your future. Right?
That would be a fair thing.
Fair?
Yeah.
I know some people are very enthralled with finances and investments and financial planning. And I know most people out there, they've probably already tuned out, and we want to try to avoid that because I think what Matt has to offer is so invaluable, especially at this point where we're at right now with this coronavirus. And I just want to make sure people are open-minded to listening versus just tuning out. Like it's the same old story. I get it. Spend less, save more, blah, blah, blah. But
yeah, that's the worst advice ever. I don't really care if you spend your money on Starbucks or traveling to South America for 3 months. That's not the point.
So if you had to summarize it in like super simple, concise format, who's a really good person? Who's an ideal candidate for, say, a financial advisor, right? Not just you, because I'm sure you probably run into similar situations no matter where you're at, whether it's Texas, Alberta, Europe. Who's a good candidate for a financial planner?
Ultimately, it's people that want a level of expertise and personal experience that they can't get, say, through just investing through a bank or doing it themselves. And generally, they value their time to a certain level that they're willing to pay a fee for somebody to service their financial needs. That's the gist of it. I mean, there's lots of places out there that you could just get a basic portfolio for very cheap, or invest in the time and effort to do it themselves. There's lots of tools out there that we've got Google now that can basically you can learn a lot of information out there. But I find personally there's things that I'm willing to pay a premium for because I don't want to invest the time into knowing whether or not I'm making the right decision. I want to know what the decision is.
Yeah.
I want to know why it's happening. I want to know all about it. But at the end of the day, I don't want to make that decision myself or in isolation without the advice of a professional that I'm going to pay a fee for. So I don't do my own taxes.
And that's a great comparison, right? Like, could you do your own taxes? Yes. Is your time better spent somewhere else? Probably. And I think that's a really good point you make about why somebody should hire a professional. Because it almost sounds to me like, and I don't know your ideal client, but listening to you, it almost sounds like your ideal client would be like mid-level manager, employee, somebody who's got a long career, or a business owner, somebody who's mature in their business and has some wealth that they want to invest, but doesn't want to manage it all because they're busy running or growing the business.
Yeah, I factored what it would cost me, to manage, to do my own taxes, my own bookkeeping. What would it cost me? How much time is that worth to me? What could I make over the next 30 years of my life by investing that amount of money on a monthly basis for somebody to do my books for me? That's the type of decisions that I don't think everybody necessarily makes, but a lot of people will intuitively, because they know that there's a lot more value for them to be allocated elsewhere, or maybe they just want to spend time elsewhere, family, all types of stuff that they just don't really want to think about that. They want to know where they're at, what they're doing. They want to be kept on track. But at the end of the day, I'm not going to spend a whole lot of time investing in that area of my life.
Yeah. Yeah, no, that's a really good point. So right now, we're in the midst of this COVID-19. I'm sure you've seen it with some of your clients and just people in your network. There's a lot of fear. There's a lot of uncertainty. And, money is a pain point for most people on a good day. They don't understand it. Maybe they're a little confused by it or intimidated, or they've got some values about money that don't coincide with 2020 and how people live their life and spend their dollars nowadays. What do you tell people out there who, whether your clients or not, people who are just maybe a little bit frozen, maybe they're a little bit stressed out, they don't know where to go or what to do right now?
Yeah, I think probably the first thing is relax. We're going to get through this. Like we figured out a lot in our world, and I think we'll probably figure this out as well. That being said, it's not, just wait for everybody to solve your problem. There's things we all need to do, and according to our individual situation, to ride this storm out. But that's the number one thing is I think people are freaking out about things that, really at the end of the day, I read an article yesterday that said, basically it was a really odd position of basically let the whole U.S. kind of, people just let the virus go so we can keep the economy going. And, essentially it was like, saving the saving the risk of the village.
Yeah.
And literally the quote it said is, the economy is worth us living for, and without the economy, life's not living or worth living. That, that was the thesis of the article, that basically without the economy or without all the stuff, we're basically like, it's not a life worth living. So
Right.
we will let this thing burn. And I'm just like, I think we've got to relax here. We've been a pretty resilient species in the world. We've lived through a lot of stuff that lasted a lot longer than what we're gonna see right now. We've got a lot of tools in place that people didn't have in the past, and the Spanish flu, Black Death. And you're talking there were decades where they had these things under control, and a third of the population dying. We've made it out. I don't think we're gonna get near there, and I think we can also live with a lot less in our world. That, yeah, it's not as much fun. There's a lot of things I do love about this world, but it's not the worst case scenario. We haven't even thought about the worst case scenario. We've thought about a slightly painful experience.
Yeah. And it's funny you say that, because in our moment in time right now, this is the worst case scenario, right? But when you take a more global approach, I mean, even look at Hurricane Katrina, right? How many people were displaced on the coast for how long?
Yep.
I mean, I don't even know, but you read articles, you see news reports. I think it was like weeks or months. I think it was weeks before Red Cross even got in there with the military.
Yeah, and it was years before that place even looked like a functioning town again. I traveled there in 2006. That was 2 years after Katrina, I believe. And that place was still just a ghost town.
Right.
It was just a ghost town.
Yeah. So, I mean, when you put it in perspective like that, what you did, you take that big global approach, it is really true. Like, we're going to get through this. The sun is going to rise tomorrow. There might be clouds over the sun for the next couple of days or weeks, but we are going to make through. We're already seeing headway in parts of the world. And, it always gets darkest before the dawn. So I understand there's a lot of fear right now. The US just surpassed number one hotspot, I guess, or number one infected cases. Italy's still increasing. But that also tells me that we're getting closer and closer to the peak. And
Yeah.
And I don't know when it is. I actually refuse to look at statistics.
Or the bottom of the market and all that, yeah.
Yeah, I refuse to read too much news, because it just, once I know enough about something to make a decision, which my decision was socially distance and listen to what the professionals are saying, I don't need to keep looking into it. I know it's going to pass. I don't know if it's 10 days or 14 days or 9 days or 3 weeks. But I think that's one thing that a lot of people right now, because they have time, they're getting stuck, and they're getting stuck in their own head with, consumed with negativity. Right. And it's hard not to. I empathize with that, but there's a lot of opportunity right now. And if you've got people who are invested, right? Maybe you've got some people out there right now that either have some money on the sidelines or they're invested in the market. What's a tip or a couple tips that you'd tell people who don't have any money in the market right now?
Don't have any money in the market. Don't get too excited. Are we at the bottom? Maybe, maybe not. Was the bottom on Monday? Who knows? I'm of the mindset that we're going to probably tread water here for a bit longer. I think the market's priced in a lot of the downside, but could things erupt further quicker? Absolutely. We priced in what we know now, which the market's told us this week that it's kind of most of the scenarios, because U.S. cases on the rise, earning and basically GDP hits are coming in. So it seems like actually people are going, so, okay, it's not as bad as we had thought. But could it get worse? Absolutely. So most people I'm telling, if you had capital that you want to contribute into the market right now, look for good buying opportunities over the next probably 3 months.
Right.
And part of that is now. Now is a good buying opportunity, but certainly not for all of it.
Yeah, I know for sure. And I mean, obviously you'd need much more detail with an individual before you could even talk specifics, but I know that it depends a lot on people's needs, right? Obviously, I think there's two components. There's the risk component. How much risk do you tolerate generally? That may drive a decision. And I'm not the professional here, you are. And there's also the liquidity needs. If you're a 32-year-old man or woman and you don't care about your portfolio for 30 years versus you're 58, 62, 65, about to retire, I would imagine that those two clients have much different recommendations,
Absolutely.
just based on that.
Yeah.
So it sounds like
that question was, there's somebody who has $100,000 to allocate to the market. I've had that question come up with people is, hey, I've got like $30,000 I could put, to work right now. And I go, well, let's start putting it to work, but let's not get too excited right now. So yeah, obviously one of the big things is people's personal financial situation. My 100% thing is saying 6 to 9 months, your doomsday scenario. What does your life look like?
right.
How does that sit with you? Which for me, I'll be negative cash flow for a while in my doomsday scenario, but I'm not all that concerned with it because I know I've got the savings and everything to take care of it. And so I know I've got X amount of dollars to basically put aside at good discounts for what I see over the next while. Not everybody's in that situation. Some people, low risk tolerance, they might have their job cut. They don't really know what it looks like and it freaks them out. Well, then you probably just want to hold on to your cash for a while. And maybe, we'll reassess in a couple weeks or a month.
It's funny you say that because we're in such a digital world and we don't even think about cash anymore the way it is. In fact, when I get paid by cash from a client, I'm almost like,
yeah,
what the hell is this thing?
What do I do with this?
Yeah.
Can I take a picture of it and deposit?
But it's funny because in times of strife, cash is king, man. And in times of, and in all times, but especially in times of strife in business, cash flow is king.
Yes.
And, you can weather a lot of bad storms if you have cash flow. And I think it was Charlie Munger who said, you don't know who's swimming naked until the tide goes out.
Yeah.
And right now the tide is going out and you're finding out like, wow, that business, I thought that was a good business, but actually they were just riding the razor's edge the last 12 months or I thought that guy was, all good. He's always buying new things. I thought he was living the life, but it turns out he was living on credit.
Yep. Well, and even returns. I mean, you can lever up, a house. You buy a house for $400,000, you put $395,000 of debt on it, and it goes up $1,000. Well, that's a great rate of return. But it's pretty risky if the market goes down by $1,000 or $10,000, $20,000, $30,000. And so that's what's getting exposed a lot right now is who had not only diversification from various areas in the world in terms of their asset base or their cash flow, but also just how much debt they had and how much they have to service over the next while. We might not have income depending on your occupation for the next 1 to 3 months. And that's just a basic thing it's a very foundational financial principle to be able to weather that type of a storm. Now, if it goes a year or a year and a half, then there's a lot more sympathy that, people can't kind of weather the storm. But a few months is a basic financial principle for people who have money. There's obviously a lot of situations where single moms, things like that. Not in talking to that type of situation.
Yeah, I know for sure. So, you spoke about this a little bit earlier, but for people in general, what do you tell people about this event? They're focused on this every day. It's more bad news. Everywhere they turn around, they can't escape it. What do you say to them?
Stop it. Like I personally, I don't look at my phone for the first 2 hours when I wake up. Like I want to start my day the way I want it started and with what I hope to accomplish, not with what people are going to start feeding me about, what's going on in the world. Now, obviously I'm going to take that into account and adjust my plans, but it's got to start with yourself and what you want to do and what you need to accomplish and how you're going to get that done before, you start hearing about how the world's falling apart tomorrow, because that's what's going to get people to click.
Yeah.
We're inundated with bad news on a regular basis. And now that there's actually something bad happening, it's that much worse. We already knew before when things were pretty good that we needed to focus on the positive. And now things are really bad and it's just increasing that problem.
And it's so true. And I think the advice you're given is far surpasses financial, and that's just general life advice. Not looking at your phone for the first 2 hours. That is like get a slow clap for that one, man. That is a phenomenal life skill, because that's exactly it, right? We wake up and we're already being probed and primed for the day. And I mean, for anybody out there with a family, I mean, you've got a family. How much love do you want to give your family? How much passion, how much energy, how much focus and attention and presence do you want to give your family when it's just negative, negative, negative? When you're already stressed about the day, when you're already worried about the emails, and not even because of COVID-19, just on a normal day-to-day basis. This guy screwed that up. She didn't email that properly. And it's just like, we got to stop it. You can't stop things from going wrong.
Yeah.
Things are going to go wrong because they're going to go wrong. You can train your employees, your staff, management. You can systemize and do this, and you can do it as best as you think. They're still going to make mistakes because they're human, So I think your personal habit there deserves a little more attention, because it's so imperative. Because when you take control of that, I mean, the beautiful thing I've noticed about COVID is that if you see somebody's Facebook post that's not about doom and gloom, it's about unity, community, faith, family, help. It's about generosity. It's about helping each other. I've never seen so much community in North America in all my life. Yeah. I mean, I've traveled the world, and community in Europe, Central South America, Africa, it's Asia. It's woven into the fabric of society. But in North America and Western society, I mean, we're so independent and individualistic, society versus collectivist society. And now you're seeing that return to kind of a collectivist, where it's like, wow, okay, like now that everything's really going bad, what do I care about? Yeah. What do I really care about? And if somebody can take this habit and just implement it on their life going forward, I think you're going to see a massive ripple effect in the happiness that people are, the productivity, the quality of their life. Because you're also teaching your kids, for anybody out there, right? Like, if your son or daughter knows that, working equals stress, and being in this career equals stress, because I always see mommy and daddy upset. Yep. And it's like, is that the image you really want to give? So I didn't mean to go on a big rant about it, but your comment just is very near and dear to my heart, because I have very similar philosophies, and I'm very much about controlling what comes in, because it's very easy to let it consume you and change you and mold you and modify you on a daily basis.
Yeah. No, it's the whole principle of, I mean, it translates into everything. You've got to get away from the noise to actually make an informed quality decision. And that does include some of the noise. You've got to take in the noise, because we can't just, be in isolation and make a decision. But ultimately, the media doesn't know us. What is being posted out there is not me. That's what's going on in the world. I've got to figure out who I want to be first, and then go integrate that with the world. Same thing in work, same thing in business, same thing in investing. Really at the end of the day, lots has changed, but not all that much has changed as much as we think about it. The world will tick again. And if I get into opening up the world and saying how everything's going to be just completely dismal without facts and research and quality information, I'm going to translate that into my investment decisions and think, wow, the market just must be completely terrible, and everything's going to go down. Well, I think a lot of the companies that have good cash and all that type of stuff, they're going to be around for a while. And now everybody's freaking out. There's probably a good buying opportunity, because this is what I value the company at. This is what I believe it's worth. And then what's the market valuing at? Am I going to buy or sell or whatever? And that's where that whole starting just with what you want to accomplish and getting rid of the noise, it translates not only personally, but all the way to the other side in the markets or investing. And yeah, so I'm a fan of that.
Yeah, I know. And you bring up a good point about things are on sale. And I always use this analogy because it's so true. But like, if you love Levi's jeans and you walk into the shopping mall and you need a pair of jeans, and you go and the store, the employee goes, hey, guess what? Today, lucky day. So glad you came in today. We actually have buy one, get one free, 50% off. You get two for the price of one. 99% of people are like, holy crap. I was going to buy one anyway.
I might buy four.
I might buy four. I love Levi jeans. I've worn them my whole life. They fit great. I don't like the other ones. They don't fit
I'm going to put
properly.
one on the shelf for like 5 years. So when the one I actually wanted to buy goes away, I've got a free one sitting there.
Exactly, right? But when Levi jean, the stock goes on sale 50%, people lose their mind. They freak out, they freeze, they go sell, sell, sell. It's going to, it's going to go be horrible. It's never going to come back. People are never going to buy jeans again. And it's like, guys, yes, there are companies or industries that will be significantly changed from this event. I truly believe that. I believe that the digital revolution is actually expedited now because of this.
Yep.
I think you're going to see that natural hockey stick curve move us further into that exponential growth curve of digitization, of automation, of integration into our world. Call it the cloud, call it AI, call it, machine learning, whatever you want to call
Video
it.
conferencing.
Video conferencing. Like,
I think Zoom's doing okay these days, right? They're
exactly, right? But this,
or-
yeah, but this does present interesting opportunities, because now you have to say, okay, how does this affect like a traditional REIT that invests in office space? I would think that it puts pressure on price, because now all of a sudden you've got all these corporations, big and small, one person up to 100,000 employees, that go, you know what, like that sucked, and that our productivity was down because people were displaced. But actually we were able to mitigate this and change this and accelerate this and streamline that. And I think we're actually going to downsize our campuses, and we're going to let go of some leased space, and we're going to incentivize employees to work from home, and we're going to have, social events once a week or whatever. And I think that that's an industry that, and I'm not predicting it, but what I'm saying is, like, if you owned a REIT that was heavily invested in traditional office space leases, you may want to look at that again, because the ripple effects of that could put price pressure on it, and maybe it's time to exit. Versus like Starbucks. Are people going to drink coffee again? I believe that cruises, travel destinations, tourism, Cineplex, movie theaters, entertainment facilities, roller coaster theme parks, coffee shops, beauty supplies, the little smaller expenses that make people feel good, socialize, they allow them to connect with human beings. I believe you're going to see those industries actually boom when this is all done, because people are pent up and they're really missing that human to human connection. Because as much as it's amazing that you and I can talk on Zoom right now, there's so much missing because of this interaction is not face to face. So is there a risk with owning Carnival Cruise Lines right now? Yeah, because I don't know if they're going to be in business because they have no income. But if there's a player standing at the end of the day, do I think people will cruise again? I personally do. I'm a perpetual optimist in commerce and in business. And I think people will change their habits, and will definitely, certain industries will thrive and certain industries will die. But I think people will get back to the way that they lived life, for the better part of the same amount.
Yeah, no, I think certainly businesses that have larger lump sum purchases, there's going to be a backlog and a pressure building from people who are delaying decisions. The ones I'm a little bit more skeptical of are the businesses that say require more on daily foot traffic than they do anything else. I think they'll have an uptick, but will it outweigh the loss of the revenue they've had in the past? I don't know. But I think they'll still be fine businesses, and we're talking fractional points. But I think some of the companies that have bigger issues because they're getting really hammered because, well, if this thing lasts a year and a half, well, they're going to go bankrupt. But if it lasts 6 months, people are still going to, get that purchase done. They're going to still travel. They're going to do a lot of things, and they're probably going to do it all a bunch when things subside. And that's larger ticket dollars, more higher profitability type businesses. Those are the ones, if you can find those unicorns, I think there's probably something there with some upside on the larger purchases. Because I think there's going to be a lot of downward pressure as people withhold right now. And then when things subside, well, they're going to backlog all of that. So they didn't buy it in March, they might buy it in September. But say like a Starbucks, they maybe buy it 3 days a week when they go to the office. Well, they're not going to the office for 3 months. My guess is they're probably going to go 3 days a week after it subsides, and they're going back to the office. So you're kind of losing a little bit of revenue there. So
yeah, no, and it's a great point. I think one thing that you touched on a bit that I don't know if people fully understand how much it's going to impact a company's ability to generate profit and value for a shareholder going forward is debt.
Yeah.
You know, debt already scared me as an investment. And as the way I operate my company, we operate very lean without a lot of debt because leverage is beneficial. I mean, to be perfectly honest, the only reason that we're able to do the things we are in 2020 is because of leverage. If every single man, woman, and child had to wait until they could save up and afford to buy a house with cash, nobody would ever buy a house.
Property prices would be 150,000.
Exactly. Like it's impossible. So, you know, to criticize debt and the banking institution is to also criticize the qualities that you take for granted without even fully understanding it. But too much debt, excessive debt, you know, there's a lot of companies who say, oh, we've got tons of cash. But what they're referring to, that they've drawn down a credit facility or a credit line, or they've tapped something, that's not cash. That has to be paid back with friends, you know?
I think your audio dropped there.
Can you hear me?
No. Oh, maybe it's my internet connection though.
Still there?
There we go. Now I can hear you.
Oh, that's weird. All right.
Time will tell if that was me or.
Basically, what I was saying is there's too much corporate debt, and I think you're gonna see the ability of companies going forward to either thrive, and good companies are going to take more market share away and be nimble. They're going to be able to buy out players, or they're going to be able to do mergers and acquisitions extremely beneficial to their terms, or they're going to be very limited in how they can operate. If you look at like a Boeing, you know, Boeing is a company I've followed quite closely over the last 2 years. I don't invest in it. I've traded it a few times. I have a position on currently with Boeing, but fundamentally, my gut, I can't invest in Boeing. I don't agree with the management. I don't agree with what they've done. I think it's a very mismanaged company. But on the other side, I'm also aware that they're absolutely vital. They are absolutely one of the most necessary companies in the world. And you can like that or hate that. But if you said no, I mean, they're the largest aviation producer commercially, which means that they also are the largest supplier of engines, and GE makes engines, and Rolls-Royce make engines, and a whole bunch of other people make that. And that means that warehouses and supply chains and delivery drivers and pallet manufacturers and plastic wraps, and the list goes on and on and on. I think I heard 2 million people are employed through Boeing's supply chain in the US alone. So do I agree with what they've done? Do I agree with them getting a bailout? Time will tell how that works out. There's been some details given, but not a ton. But you know, it's interesting, right? Because they're so necessary. They're not going to go away. But what do they look like going forward? And are they a good investment? You know?
Yeah. Yeah. No, I think they're right. There's a lot of companies out there that that are integral to the way we do business, and I think it's one of the unfortunate parts about, called the too big to fail, that came out of 2008, is a lot of companies did not manage prudently, I think, over the last 5 to 8 years when things recovered, to put themselves in a position to weather storms like this. And then they go, but we're too big, you know, you need us. And then they get the bailout. So yeah, it's kind of tough. That's where, honestly, as a fundamental value-based investor myself, these types of markets can drive you insane because there is just a limit. You know, G20 puts $5 trillion into the global economy, you know, just essentially by saying, hey, if we all kind of print the same amount of money, it's all about the same, right? I mean, you know, everybody's kind of do about, you know, 5 to 7% of your GDP and we'll all be okay. That's what OPEC did. I don't know what's going to happen going forward when that doesn't really work out anymore and some countries stand up and say, actually, you know what? We're not going to do that. And we're just going to bolster our dollar or whatever it is while you guys all try and figure out your own economy because we did things right.
Yeah.
I don't know. That's the tough part in the markets these days, in my opinion, is you can't really guess what value companies have because you've got a lot of central bank and government intervention, which is necessary. I do appreciate what they're doing, but it's kind of like we started it. Now we got to keep it going until we figure out that didn't work anymore. And what's going to happen on the backside of that is the real doomsday scenario.
Yeah.
Not what we're at today.
Yeah. And for anybody with a big enough appetite, it's happened in history many times actually, and you can go back and learn. You can take a look at the Roman Empire. You can
Yep.
take a look at Japan. You can, like, this has happened again and again. You can take a look at Zimbabwe. You can take a look at Weimar Republic. You can take a look at there are history. I can't remember who said it, but somebody said history doesn't repeat, but it sure does rhyme.
Yeah.
And like, I don't claim to know what's going to happen. I just know that I believe in business. I believe that peer-to-peer commerce and connection and transactions will happen. And I believe people will drink their Starbucks. I believe people will buy their iPhones. Maybe they don't buy the nicest iPhone with all the bells and whistles. They get the slightly modified one, but I still think it's going to go forward.
Yeah.
The time is when. Nobody knows.
Yeah, and I think even just a larger principle of things like this is the, I don't know, I don't know how you feel about diversification, but I feel like you've got to be concentrated in certain areas. Like, you're not going to just buy, everything in one area, but, having physical gold, physical cash, having your stocks, having your private investments, whether that's your business or your real estate or whatever it is, having lots of different buckets that do different things in different times. And some things that actually have intrinsic value. I mean, the weird thing in this market is, for a while there, and this happened in 2008, bonds went down just as bad as stocks did. So if you're holding, you're holding what was a great bond a month ago, and you're trying to sell it on the open market to get cash, and people are saying, yeah, okay, I'll buy it for you 90 cents on the dollar. Like, what do you mean 90 cents on the dollar? This is a bond. And so you had a liquidity crunch where all of a sudden, gold was riding high there for quite a bit. And then even gold is going down a bit, which is just incredible. So I think having that diversification and dry powder for, whether it's a business or a person who's going to be investing in businesses or just managing their own personal situation, is incredibly important.
Yeah, I know it is. And I don't have a problem with diversification. I have a big issue. I take big issue with over diversification.
Yep.
Because I actually just posted this on my page maybe 3 days ago. Diversification is insurance against ignorance. And it does protect you from the downside to a degree, but it also limits your upside. So I would argue that over diversifying, yes, you can sleep a little bit better at night knowing that maybe your portfolio would only go down 20% and somebody else's goes down 40. But if you ran that out long enough, I'm willing to bet that the savings and the peace of mind doesn't outstrip the benefit and the extra gain, thanks to compound interest, thanks to time. And
well, the key is diversification without action. So if I'm holding gold and I'm holding the stock market, gold went up, stock market went quite down. Now, if I don't do anything, then that's a waste of time. Because yes, over time, stocks are always going to be, better, or at least historically. But if in that scenario, I take off my gold and go, gold did pretty well, I'm going to pare it back to my allocation. I'm going to take that cash, I'm going to put it down here. You are definitely creating value in diversification, but you've got to have that ability to be able to move things around and take that action. Otherwise, you're just, gold is great sometimes. In terms of 100-year history or 500-year history, gold is a terrible investment. It does inflation. That's basically it. So that's where, if you don't take action and actually, call it concentrate or move those bars around and slide it around, that's where the problem exists in diversification. And people just go, oh, I'm very diverse, I'm okay. And they don't think about it or make action. Well, no, that's not true. You're diversified so that when things happen, you can rebalance, you can move around, you've got different things. And I think that's the same thing in businesses, having diverse income streams, or even households having diverse income streams. That's how you truly build wealth, is build up these strong, diverse income streams, whether it's a business or a household, to be able to do that. That's one of the buckets.
Yeah, I know. And that's a great point. I mean, and you talk about action, and, action and execution trumps knowledge any day of the week. You can be the smartest person in the world, but if you don't take action on the knowledge you have, you can be the most skilled hockey player, but if you don't actually go out there and play, it doesn't matter. You're just a was or a could have been or a should have been or maybe.
or maybe I can outskate Connor McDavid on, on a drill. That really doesn't matter because I can't, weave through 5 players, dip around one guy and shoot it up into the top of the net. I mean, that I might be able to outskate him on a drill. That doesn't matter. I might be able to skate somebody on a knowledge test or an IQ test, but that's not going to matter in terms of the real world. You got to take the action. You've got to be able to execute.
Absolutely. And to your point, if people looked at asset classes and let's say in real estate, right? Let's say '07, pretty much globally. What if you just looked at your real estate and said, you know what? Like, I'm not a real estate expert, but I bought this house for $100,000 and now it's worth $250,000. And all my friends are saying it's harder and harder to get afforded for a house. Maybe I'm just going to sell and I'm just going to rent for a couple of years because I just made a boatload of money and I'm just going to wait and see what happens. I mean, if you had just done that and then you took that money and invested into the stock market, you would have quintupled your money inside of a decade. But if you left your money in real estate and your house for 100 went up to 250, well, right now it's probably coming back down to 100, so maybe 150.
Yeah. I mean, at the end of the day, most real estate markets have just climbed out of the '08 market, whether, sometime inside the last 3 years, not multifamily property, multifamily's gone through the roof, things like that. But yeah, certainly, your house has probably just, started to appreciate again over the last 3, 4, 5 years, depending on where you're at. Or, in a concentrated area like Vancouver, Toronto, LA, stuff like that. But yeah, if you're in most of the world, we're probably below 2008 now or slightly at par. Instead of that, call it that rebalancing that you're talking about.
Yeah. So speaking of that and kind of building on that, just to wrap up here, what would you recommend as a couple things? What's a couple tips? What is a couple things people should keep in mind on what not to do? What's the wrong thing to do right now?
Get outside of your discipline principles. I think that's probably the most important thing in any area of life. To get excited about, overexcited about the market opportunity to the detriment of your personal situation, where if you don't soberly assess the next 3, 6, 9 months, great. There might be some great opportunities in the stock market, but if you don't have enough cash to live on over the next 3, 6, 9 months or a year, then that's going to be a bigger problem because we don't know when this thing will recover. We just know it's a good buy for the next, call it, decade. So getting overexcited, I think, is one of the biggest things that people need to take consideration in this market, is to really assess what their life looks like over the next 1 to 2 years, and what are they comfortable, and do they actually have margin to take care of that, and not expect everybody to make it right or this thing to subside really soon, because it might not.
And I think that's a really good point. Does it? Maybe, hopefully, I think it will. I'm not an expert, but what if it doesn't, right? Plan for the worst, hope for the best. And I wanted to loop back to something you started at the beginning, because it's actually something that you do that I don't know if as many people know about, which is the exempt market. Yep. Traditionally, people know about the stock market. They know about bonds because probably their father or their grandmother gave them some bonds. They know about gold and silver because they've probably seen a gold coin or a silver coin. They know about real estate because everybody understands that. But the exempt market, what is this unicorn exempt market that nobody seems to know about? It's kind of a gray, back alley, dark, dim night lights. And what's the exempt market?
In the past, No, it's a very, a lot of people don't know. Dell, that's a private company. You don't have to be publicly listed to be a private company or to be a big company. Dell's a very large company that's private now. A lot of companies are electing to stay private because of the volatility and quarterly grind of constantly having to prove to the market that you're a worthwhile player. And so the private market is something that's becoming much more in vogue. But certainly when things get quite heated in the public market, the valuations the private market can offer tend to be a lot more down to earth. And that's sometimes that's because they are smaller companies, but a lot of times it's because it trades on more of a, call it a tangible fundamental value. I always relate it to the way a commercial real estate property is valued versus a residential real estate property is valued. Residential real estate, if you want to buy my house, essentially you and I agree on a price, and we kind of go, okay, well, there's some comparables in the market, and well, okay, this is really what I'm willing to pay for it. Commercial property, there's the comparables factor, but it's really how much does that property generate in cash? How much does it cost to operate that property? And then, okay, comparables in the market kind of dictate what multiple you go at, but it's much more of a tangible valuation than it is, say, the residential real estate market. And I think the public market can sometimes get to a point where it becomes the residential market, not the commercial market. And we get on this train of, oh, the stock market's going up, let's just keep kind of going after it, which was probably the last 2 years. A little bit of a freak out in December 2018, and then 2019 just through the roof. And valuations were way, way, way high. So the private market not being tied to the buy-sell of the public market can sometimes have some unique valuations, unique investment opportunities, and just different risk-return profiles than people would get out of the public market. So it is a different piece. I mean, CPP is over 50% private investment. Exempt market, private market, those are kind of, call equivalent terms to a certain degree. Yale, I think their endowment fund is now over 75, 80% private. That might be a little bit too high, but it's not far off. A lot of these longer term players that need to manage cash flow and can't take a 2008 want to get in at different valuations. And so right now, I don't think the exempt market has as much to offer as it did, 6 months, a year ago, 2 years ago. But it's certainly a worthwhile piece of people's portfolios that they can in terms of those buckets we're talking about of diversification. It is great access to things that people might not be able to get on their own.
Yeah, and like you said, it's oftentimes people probably don't even know what the exempt market is, and it's this kind of elusive thing, kind of like a drug dealer in the back alley, and you don't really understand it. There are pros and cons, like you said. I think it got a bad rap years ago because it maybe wasn't as well regulated or understood.
100%.
And that has come a long way since. And a lot of people have private equity holdings. And to your point, having analysts breathe down your throat, having the SEC breathe down your throat, having a board of directors always having to go out there quarterly and be judged quarterly, it drives a different kind of motive for certain management teams. Businesses go through cycles. The automobile industry goes through a cycle. Just because car sales are down 6 months or a year over a 10-year cycle doesn't mean it's a bad investment. It just means that that's secular versus cyclical. And maybe that's just part of the ebbs and flows of the business, but you're judged every quarter. Every 3 months, you got to produce.
Well, I'm risking a very ignorant comment. I've never heard of a share buyback in a private company. Generally,
yeah.
That you talk about the share buybacks that are happening in the public market that have propped it up quite a bit, as with cheap debt over the past number of years. In private companies, they don't do that because you're going to increase the risk of the actual value of the company. And they tend to not do that. They leverage up for other reasons, not to buy back more of the company. And so there's that are different too.
No, they are, right. And there's liquidity differences as well. There's requirements differences. I mean, the nice thing I like about the private equity market is the public equity market. You can just open a brokerage account and invest, and you don't have to know anything about what you're investing in, which is also a big barrier to enter. A lot of people won't because it's kind of scary, but it's also can be risky if you don't understand what you're investing in. Versus the private equity market, maybe a lot of people don't know this, and you can shed light if I'm off course a little bit, but there's almost like an interview process. You take a look at an individual situation. Are you even in a position to be taking this kind of investment on? And there's more requirements so that it is geared more personal than something else.
Yeah, I mean, one thing, this is provincially specific. Every province kind of has their own different regulations, but across the board, if you work with a licensed advisor, in the private market, you can invest up to $100,000 a year as an eligible investor. If you go directly to companies, not through an advisor and a brokerage, you can only invest $30,000 per 12-month period as an eligible investor. So the Securities Commission there already, even though it's less regulated than the public market, they're basically saying that the advisor actually has more of a due diligence process, not only with the client, but the brokerage also on the company, that makes this a more investable market than people doing it on their own.
Which I think is a great thing because it actually funnels people advisors like you who have more to offer than just to say, hey, I collect a fee. It's a lot more than that. I mean, you're paid according to the results you produce, and you should be paid. And I think advisors maybe get a little bit of a bad rap because of some, and because of, maybe some hedge funds or mutual funds that have really milked people in the past, which is not the case anymore. I mean, you've got index funds, and you've got Wealth Simple, and you've got a whole bunch of these robo advisors which have cut costs and cut fees. And not that that's the only way to go. It serves a certain demographic, but it doesn't provide a lot of value. And I think advisors can do that, and can custom tailor things to certain people's situations.
Well, in a market where you almost have to go through an advisor, and the market says you have to go through an advisor, and the advisor charges 1%, what's their incentive on me as an advisor to do much more than just sell the fund? Because, well, you kind of have to go through me. There's not other options out there, or there's no cheaper options. Now that's a much different ballgame. And you're seeing a lot of the crap get out of the finance industry, like deferred sales charges are pretty much gone now. There's still a few companies that'll still do it. Fees are coming down. And I think people are really starting to understand that, okay, the advisor's not just here to sell me something. They're actually here to advise me and service my account, and to be, in my corner on a multitude of areas, not just, hey, I've got a great fund for you to put your money into and sell that, and then, create a passive income for their retirement off of the backs of their clients.
Right. Yeah. For sure, man. Well, if people want to find more out about what you do and how you can add value rather than just make money off their backs, how do they get a hold of you? What's the best way?
They can check me out. I've got Google reviews, website. I'm trying to build up a little bit of a Facebook presence, but I got some articles that are up there. But read those, look at that. I've got a contact page on there. To reach out and book a free initial consultation, so we meet. I basically provide as much advice as I can without knowing specific situations, to show you essentially the value of working with an advisor, and the value that can be created in terms of your own situation. And, to be honest, probably 20 or 30% of people walk out of that and go, thanks for the advice. I'm going to continue to do it myself, or, oh, you actually gave me some peace of mind that I'm actually doing the right thing, or, and then I think majority of people go, actually, that is what I'm looking for. I kind of want somebody, instead of, TD, unless you've got $100,000 with them, you basically get directed to a toll-free service. So, and you're still paying the 1%. You're still paying the advisor fee, and you're getting directed to a toll-free service. So if you like paying $1,000 a year as a $100,000 client for a toll-free service, by all means, enjoy that. But most people go, okay, I've got somebody who knows what they're doing, they're qualified, create value in my situation. And so that's the best way to get in touch, is contact me through the website or my number on Google, and book a consultation. We'll have a chat, see if there's value I can create in your situation, and if not, glad we can meet, and hope I created some value for you to go to the next step or go somewhere else.
Cool, man. Awesome. Well, just closing remarks, anything just to recap again, people should keep in mind, people should remember right now during this time?
Stay disciplined, keep grinding, keep moving on. The world will turn again, but it's the people who press into this time that are going to create exponential growth out of it. If you flounder and you just ride the wave, well, then when the wave comes up, you're just going to ride with the wave, not actually create any meaningful, call it alpha, to use a finance term, in your life. The people that are going to push into this time, whatever area it is, they're the ones that are going to come out of this poised for exponential growth when the next wave up comes through. But the people who flounder and fearful and panic and get paralyzed, they're going to miss a lot of opportunity out there, in all kinds of areas, whether with their clients, whether in their personal finances, whether in their relationship at home with their kids and family. During this time, we're all isolated in that area. There's so much value that can be created in this season. We can't focus on what we've lost.
100%, man, because the season is actually how I was going to close this off. I think we're entering winter, and after every winter, there's a spring.
Yep.
And spring is the time to plant. Spring is the time to get excited. Spring is the time to get outside and play. So if we got to throw some winter jackets on right now and cuddle up and just stay warm, so be it. But spring is coming.
So much that can be done in this season.
Yeah, for sure, man. Cool. Thank you very much for your time. I'm going to link all your contact information when I share this video out. And yeah, stay safe.
Absolutely. Thanks, John.
Okay, man. Talk to you soon.
Bye.
Bye.